Hey everyone, welcome back to another video. So it does seem like that the bull run in the bear market is finally over. So we're finally seeing the end of the crypto winter. And what exactly is crypto winter? Well, what we're seeing right now, or what we were seeing, is one of the longest crypto winters in the crypto history. And a lot of the holders and a lot of the buyers are returning back in a nice old-fashioned way, saying, "Hey, crypto again, it's a great thing, and I'm so glad to be back." And that's a pretty awesome thing that a lot of people have been waiting for the crypto winter. So that's a pretty awesome thing that I'm pretty excited about. So that overall is pretty cool. We did see some improvements in the market overall, and that being said, it does seem like that we are not seeing those crypto winter moments anymore. Crypto winter basically means that there is no money in the crypto market, that everyone is going away, all the projects are failing, and basically people have to be just patient and waiting. Now, Forbes did make a massive announcement on this also on a podcast, and I'm going to clip it and also give my own thoughts on it. So smash that like button if you haven't already.
Of a comprehensive regulatory framework that clarifies which crypto assets are securities and which are commodities, to essentially end that turf war between the SEC and the CFTC.
Would the CFTC even have the bandwidth to regulate crypto?
That's a real question because the CFTC doesn't have the same scope as the SEC, and that's a real concern that's been voiced mostly on the Democratic side of the aisle. So it is a concern going forward, and something that needs to be hashed out when this House bill I mentioned goes before the House floor, and after that when the House legislation goes over to the Senate, because it is a real concern.
And right now, what is the SEC? What are they claiming to be securities versus commodities?
And Gary Gensler, he sat down with New York Magazine in February, and he effectively asserted that everything but Bitcoin is a security. And so by that definition, really every crypto asset is a security except Bitcoin. There's a lot of disagreement and pushback against that idea, not only in the industry, but by the CFTC and even by the courts as well. So that's been another major issue recently, is the Ripple court case. If you want me to get into that, I can just briefly. But so what happened with the Ripple court decision was a couple years ago, the SEC filed a lawsuit against Ripple Labs, which is the issuer of XRP, which is one of the biggest cryptocurrencies in the space. So in this lawsuit, the SEC asserted that XRP was a security and that Ripple was issuing an unregistered security, and therefore should be the law should apply to them. And so what happened in this court case, however, was a monumental decision for the space. So Judge Annalisa Torres, she actually ruled that when XRP was first issued and sold to institutional investors, it was then a security. But after that, when XRP was sold on crypto exchanges, you had a lot of retail investors buying this asset, not knowing that it was tied to a specific company. And so by that definition, it actually didn't meet the criteria for a security. And so that has huge ripple effects, if you will, for the industry itself, because the implication, if that ruling stands, is that the majority of crypto assets sold on crypto exchanges like Coinbase or like Kraken, for example, against what Gary Gensler has said, that those are all securities, they are actually not securities. And so it's had a lot of really large implications for the space going forward. And it's emboldened the crypto industry. It's been notched as a huge win for the industry, and it's hard to deny that it is.
Yeah. I actually remember when the XRP lawsuit first happened, there was this guy in our crypto group chat, and he was shilling XRP. Everybody buy XRP, buy XRP. And then it dropped. And they threw him out of the group chat and everything. I bet he's giving us the finger right now. Anyway, let's talk about the bipartisan efforts, how Democrats are starting to kind of go on to the other aisle with the Republicans when it comes to cryptocurrency.
Yeah, so that's an exciting development. So earlier this year, some were starting to believe that cryptocurrency itself was becoming a partisan issue, where Republicans were for it and Democrats were against it. But there were some really sharp policymakers in the space who pointed out that this isn't a partisan issue, it's actually a generational issue. So there's been some leaders on the Democratic side of the aisle who have really been forward thinking in the way that they've approached crypto legislation. One of them is Representative Richie Torres. He's a younger congressman who actually actually here from New York. And so Tories and Representative Nickel, they are both very innovative in their approach to digital assets. And they pointed out that digital assets are really good for financial inclusion, for example. And they're really good for value transmission over the internet, which they see as being essential to the US expanding its internet influence abroad. And so in this last round of votes on the House Financial Services Committee with that comprehensive crypto legislation I mentioned, there were actually 6 key votes from Democratic legislators who voted in favor of passing that comprehensive crypto framework out of committee. And so that's key on a number of levels. First of all, it shows that crypto still is bipartisan. And this House legislation, it needs to pass the House with Democratic votes to have any hope or prayer of passing the Senate as well, because there has to be buy-in from both sides of the aisle.
That's like everything.
Everything.
Yeah.
Exactly. Exactly. And there's even hope on the Senate side as well, though. So Senator Lummis and Senator Gillibrand, Senator Lummis represents Wyoming, Senator Gillibrand represents New York. They actually came together to support a new version of the Lummis-Gillibrand bill, which is essentially the Senate's version of a comprehensive crypto framework. So there's hope in both chambers of Congress that both Republicans and Democrats will continue to work together to pass bipartisan legislation on crypto, which is another reason why I think that the crypto regulatory winter is starting to thaw, because more and more you're seeing Democratic support for these initiatives, whereas in the depths of that crypto winter, it seemed like it was becoming more of a partisan issue. But that crypto bipartisanship has since been resurrected.
I've spoken to Senator Lummis a few times. How is the bill different now than it was when it was proposed back then?
Yeah. So one of the major differences is they define what are called ancillary assets. And so that kind of provides a haven, or really an answer to the question of whether or not crypto is a security or a commodity, because a lot of them will be qualified as what are called ancillary assets, which gives them a certain legal distinction there. They also wrote their bill in reaction to the FTX debacle. They recognized that there was a commingling of funds with FTX. That's what led to so many billions of dollars being lost. And so they put certain provisions in this bill that prevents that from ever happening again. Another really important provision they have in their bill is called proof of reserves, which was actually an idea born on crypto Twitter. So it essentially would require crypto exchanges to show concrete proof at all times that every asset that they have listed on their exchange is actually backed up. So they have to show proof of reserves at all times, which again, the idea behind that is to prevent another FTX blow up.
Yeah, we don't need that.
Yeah, no one needs that again.
So just curious, your own thoughts. You don't think Binance is going to have a similar situation, do you?
That's a question I'm probably not qualified to answer, but there's a lot of uncertainty there because Binance is based offshore. And I know that they have come in the crosshairs of regulators in the past because they haven't been particularly forthcoming with the assets that they have listed. And were it based in the U.S., I think that they wouldn't have been able to have gone away with some of the riskier moves that they've taken. But they reap a lot of benefits by being offshore because they don't have as much exposure to concrete regulation. But there could be a risk there. I'm really not at liberty to say I don't know is the short answer to that question. But I think it would be nice if we did have a little more clarity coming out of that exchange as well.
Mm-hmm. So what are your thoughts on Know Your Customer?
Know Your Customer is a difficult issue because certainly you never want crypto assets to be used for terrorism or any kind of criminal financing. At the same time, crypto is money, and money in any form will be used for illicit means. It's really hard to prevent that. And I think it's a common criticism of the industry, especially voiced by Senator Elizabeth Warren, that, all crypto is good for is for money laundering or being used for illicit activities. That's not true at all. I mean, the overwhelming use cases for crypto don't touch anything illegal whatsoever. And the truth is that far more cash is used for illicit purposes than crypto is. And so I feel like that's a very unfair criticism of the industry that a lot of people latch onto in an attempt to throw out the baby with the bathwater, so to speak. And so there's a really fine line that needs to be walked with KYC or Know Your Customer regulations, because yes, you want to ensure that there is no illicit activity going on, but at the same time,
So Forbes here obviously made a few very fair points, basically that the market is back because the institutions allow it. So once regulating the so-called products of crypto, we're finally seeing more and more people returning to crypto overall. And Forbes is here to stand by it. Now, we're obviously very far from all-time highs in crypto, and it's still not what it used to be. It's still not all-time peaks with like 4,000 for Ethereum. It's about half of that now. But it's a great step forward because at the lowest, Ethereum was about like what, $1,000. The big winner here is actually Bitcoin, because Bitcoin was very much crashing at 16,000, and now it's going up to 35,000, which is absolutely amazing. So it's truly that the Bitcoin narrative, that the Bitcoin is gonna be the winner of them all, is like the one that is the best investment, which is very interesting. Like, they want to have the Bitcoin ETF. That's why people are buying in, and it's half of the all-time peak, which still, pretty decent overall. And obviously the markets and institutions improving is a big factor. Smash that like button. I'll keep you guys updated with more news.